The economic structures, as a general rule, have been dictated by capital. I mean, so if you have, these larger tranches of capital of the 5, 10, 20, $30 million, the capital can dictate terms more in a lot of different ways, right? So the larger the capital, the lesser percentage of our promote or our profit participation has been historically, and that's just a very plain vanilla way to look at it. And quite frankly, from our end, whether an investor that's a smaller investor makes less of the profits per se, our belief has always been they're in a deal that's so much higher quality, and the convictions that we have around the profitability and the investor protections that they have are at such a higher institutional level that I haven't lost any sleep by them making a slightly smaller profit participation interest or promote, quite frankly. But the thing that stayed the same amongst all of them, I think is the most important, is this lack of upfront fees. And that has been one of the biggest selling points for a lot of our institutions as well, because you follow the money, right? And when you follow the money, you start to see very quickly, where the agendas are. And our agenda, as I've said to you many times, is around performance. And we want to be rewarded better for performing better. And so when we are using our own balance sheet, using our own capital on the front end to source the diligence, put these things together, get the documents in place, the smaller investors require more capital on our end from a operational standpoint, because filling out the fund documents for one larger investor and the process that goes into it versus 10, 20, 30 smaller investors and setting up their data rooms and giving them their welcome kits, the investor relations component, which is a huge deal for us, of communicating with them beyond, because anybody that knows me knows we are hyper communicative. Everybody knows that about us. So many, almost every investor we have has my personal cell phone number, which is becoming a little bit more arduous as time has gone by, but it's my favorite part about the business. I love talking to our clients, and that human interaction is what I personally thrive on. But if you have 50 investors and our investor relations team is reaching out to them on bi-monthly basis, quarterly basis, whatever it comes into, answering questions and K1s and all of the things that go into it, it's just more cost prohibitive. So because of that, the profitability for the manager has to be higher, because the work that we're doing and the expenses on a per client basis are higher. What's happened is we've also never really done marketing per se. The belief is that because we have more deals than we have money at the point, and some of the institutions have become more obtuse because of the overarching environment of real estate, which is just wildly foolish, because the contrarian approach to where real estate operates is where most value is created. You look at the money that was made in 2007 and 2008 by the folks that went in and bought, versus buying at the height of the market, and so on and so forth. So even though the institutions, because of their board of directors and their consultants, and I get it, their risk management project, they want to invest, but sometimes they're not able to because of certain mandates, which, trust me, they know that they're fucking up and they want to. And because of that, the deals that we're looking at, having the more flexible capital to capitalize on these types of deals quicker, faster, more efficient, there will be a hybrid between how we use high net worth capital and how we use institutional capital. But our overarching theme is pairing institutional capital with high net worth. But if we do this right and we're able to show the value creation potentiality to normal investors, then my hope is that we can have more investors, smaller investors, in these bigger deals so that they can make even more money. So, it's not a always per se, because we're in very strange waters, but in the sense of me doing something like this and working on a mass approach to talking to investors, I've never done in my career. I've also never been in a place where I have more deals than I have money. And so just passing on incredible opportunities is just against my religion. So, so we're here having this dialogue and sharing this knowledge in the hopes of allowing smaller investors through their 401ks or IRAs and their cash investments to be able to capitalize on things that in hindsight were the greatest investment opportunities of the last 2 decades, is when the market was starting to have a downturn.